Ladies and gentlemen, good day and welcome to Hindustan Petroleum Corporation Limited Results Conference Call hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I now hand this conference over to Mr. Varatharajan Shivashankaran from Antique Stock Broking Limited. Thank you, and over to you, sir.
Thank you, Nikita. Good afternoon, everyone. It's my pleasure to extend a very warm welcome to all the participants and the management of HPCL, led by Mr. Rajneesh Narang, Director Finance and holding additional charge of CMD as of now, Mr. S. Bharathan, Director Refineries, Mr. K. Vinod, Executive Director, Corporate Finance and CFO, and his entire team. I'd like to hand over the call to Mr. Rajneesh Narang for his opening remarks, and then we can move to the Q&A.
Yeah, good afternoon, Varda, and all the participants who are attending this con call. Very good afternoon to all of you. We had our board meeting in the first half of today, and it is a matter of pride for me to say that in this quarter, the HPCL had a good physical performance both in refineries as well as marketing. As regards the standalone revenue is concerned, from the standalone revenue from operation is concerned, it is 1,08,216 crore. This is 1,02,618 crore in the corresponding previous period. In terms of the physical growth, we achieved 8.2% over the previous corresponding period. The standalone profit after tax during this quarter is 631 crore. The primary reason for lower PAT are the suppressed marketing margins on select petroleum products, reduced refining margins due to lower cracks, and falling international crude and product prices. I'll just give a brief of what exactly these three what are the impact of these three, like in terms of the suppressed marketing margin. In terms of LPG, we had an under recovery of 4,400 crore during this entire half year, and if we have to take only the quarter, that is Q2, it's almost 2,057 crore of under recovery, which is sitting as a negative buffer in our book. And in terms of the reduced refining margin, the cracks have significantly come down. And if I have to give you a benchmark, the Singapore GRM during the corresponding period of the previous year, it was $10 a barrel, whereas in this quarter it is $4 a barrel. So primarily, since the GRMs were significantly lower in this period for MS and HSD, there was an impact as regards the refinery GRMs are concerned. And third, during this quarter, the crude prices with respect to the previous quarter have come down by almost $5 a barrel. Now, this reduction of $5 a barrel, both in terms of crude as well as the various finished products which we hold, has an impact of almost 1,400 crores in terms of inventory loss. Now, if I have to talk about the GRMs, so the GRMs during this quarter were $3.12 per barrel, which was 13.33 per barrel during the corresponding period. This reduction, as I already stated, is in line with the trend of international benchmarks and product cracks. Now, coming to the physical performance, the refineries recorded crude throughput of 12.06 million metric tons. The the refineries had operated 103.7% of the installed capacity, registering an increase of almost 8.2% over the throughput of 11.15 million metric ton during the corresponding period last year, April to September 23. Now, if you take specifically the Q2, the throughput was 6.3 million metric ton, and the refineries had operated at capacity utilization of 107.7%. We have also added new crude to our basket. 2 new crudes we have started processing at Vizag, and taking the total crude basket to almost 40 odd crudes which we are having. In terms of the marketing sales, we recorded 24.25 million metric ton, registering a growth of 7.3% as against 22.59 million metric ton during the corresponding previous year. The company recorded sales volume of 11.62 million metric ton during second quarter, registering a growth of 8.2% as against 10.74 million metric ton during the second quarter of the previous year. On the domestic front, HPCL achieved sales volume of 5.6% during the quarter as against PSU industry growth of 1.8%, registering a market share gain of 0.78%. In terms of the product-wise, motor fuels were growing at 4.5%. The aviation business has been growing at 19.6%. And in case of lubricants, we are growing at almost 5%. And even as regards the petrochemical, where we have already entered the market a year back, we are doing almost 30.4 TMP. As regards the pipelines are concerned, we had a throughput of 6.53 million metric ton, which is a growth of 6.5% over the previous financial year. In terms of our growth projects, during this period we invested 3,771 crores to strengthen our refining and marketing infrastructure, including investment in joint venture and subsidiary companies. And the total capex during this half year is almost 6,590 crores. As regards our Rajasthan refinery, the construction of all process units are progressing in full swing. The current physical progress is concerned is almost 83%. And if I take the refining unit, it is more than 92%. The key process units, which is BHT, the hydrogen generation unit, they are under pre-commissioning. And as regards the crude oil pipeline for both imported as well as domestic, the job is almost nearing completion. As on 30th September, the total commitment on the project is almost 70,872 crores, and as regards the capex outflow is concerned is 50,570 crores. As regards our Vizag refinery modernization unit of residue upgradation facility, that is the water upgradation facility, we have started the pre-commissioning of this unit, and we expect that in the last quarter, that is Q4 of this financial year, the unit would be commissioned. The moment this unit gets commissioned, it will be able to have a higher distillate yield, whereby we could enable us to process or upgrade the bottoms to higher distillate product. This unit is one of the largest and most energy efficient units, and the technology is the one of this scale which is being implemented by us. During the second quarter, we commissioned 353 retail outlets, taking the total number of outlets to 22,501. We also commissioned 6 new LPG distributors, taking the total count to almost 6,364. In terms of new business initiatives, we have started manufacturing Group 3 500 neutral base oil in our Mumbai refinery. Our aviation business achieved a significant milestone by securing order for developing and operating the fuel farm and the into-plane services in the new airport, Greenfield International Airport, which is likely to come up in Bhogapuram, Visakhapatnam. This airport is being set up by GMR, by the name of GMR Visakhapatnam International Airport Limited. There was a new feather in cap for our lubricant business, whereby we made the first ever export sales to USA, thus increasing our footprint to more than 30 countries now. As regards our plan of value unlocking in the lubricant business, we have already, in line with the recommendations of the consultants, we have already started taking initiatives around supply chain, cost optimization, product mix spread, and also rolled out customer engagement programs for improving our reach as well as improving the efficiency in this business line. As regards our plan for the carve-out is concerned, we are actively pursuing the same with the appropriate authorities for seeking approval for going ahead on this. As regards our HP R&D center, the total patents as on 30th September is 606, which we have filed, out of which 232 patents have already been granted to us. There have been various niche technologies which we have developed there. One of them is the technology which has reached the commercial scale is the vapor recovery plant based on HPVRU technology, which we have already implemented in our Hassan terminal. Further, we have developed the HPVRA, which is a drag-reducing additive for reducing pressure drop in product pipelines, and it has been successfully tested at a commercial scale in our VES pipeline. The state-of-the-art catalyst additives and absorbent scale-up facility have been commissioned and made operational, thus empowering the scaling up of our R&D center's innovative catalysts and products for field-level demonstration. At the Visakhapatnam refinery, we have commissioned the first ever green hydrogen plant in any refinery. The plant capacity is 370 TPA of green hydrogen using green power, and we have already started taking 3 megawatts green power to DISCOM for the same. We have also floated another tender for 5 TMPPA per annum for green hydrogen, that is under the Site 2 scheme of the government. Similarly, our newly formed wholly owned subsidiary HP Renewable and Green Energy Limited is already working on plants on renewable on almost around 250 to 300 megawatt capacity at various places. They have also signed an MOU with Mahagenco for cooperation and collaboration in the field of green hydrogen and its derivatives. So these are primarily the main highlights of HPCL during this quarter. I'm open to taking up any questions on this. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prabal Singh from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. I had a couple of questions. The first was with respect to this LPG under recovery. Just to, sir, understand, this 2,000 odd crore is loss that is actually sitting in our P&L. When you say that you are building it in a negative buffer, can you just make us understand a little bit on the accounting of this? Is the loss actually there in the marketing segment reported numbers, or is it not part of it? Was not very clear on that.
It is part of the reported number. The loss has been considered in our books. If it is a positive buffer, we create a table and we don't take it in our revenue, nor take it as a part of the income. But however, if it is a negative buffer, it goes as a part of our P&L charge.
So, sir, is it reasonable to assume that this kind of a run rate will continue, given that not much has happened in terms of being compensated for this? Should we be building in this 2,000 crore every quarter now, as of this point?
So I don't think that would be the right way of looking at it.
Okay.
Right now, yes, during this period, the LPG prices were higher. So that's the reason why the under recovery was so much there. And going forward, we'll have to see how the LPG prices there. But anyway, if the under recoveries are going to be there, we have taken up with the government for necessary support on this aspect.
Understood. The second question was, sir, you thankfully appreciate that you mentioned the inventory loss number of 1,400 crore. Just wanted to understand, is it possible to split it between what was there in refining and what was there in marketing segment out of this?
Approximately 750 was in marketing and 650 in refining.
650 crore was the refining and around 750 crore was in marketing. Right. So just on lastly, and I'll come back, but one more question with respect to refining. So against the last year number where Singapore was at 10, but we reported about $13 because of various factors, diesel being higher, perhaps Russian crude was a factor. Versus that, in this quarter, we have actually now gone down to a discount versus the benchmark GRMs. Is it possible to sort of, get a sense of why this has happened? Is it mostly because Vizag performance is impacted by the pre-commissioning activities and inventory, or is there any other reason for it? Just if you can give us a sense.
Yeah, primarily, if you see in the same period in the previous corresponding previous year, instead of the loss of 50 crores, we had an inventory gain last year of 900 plus crores. So virtually that 1,500 crores is the difference on account of inventory.
Right. And we are still getting around 35-40% from Russia, sir, in terms of our crude slate?
Yeah.
Okay. I have more questions, sir, but I believe I'll come back in the queue. Thank you, sir. Thank you so much for your time.
Thanks.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah. Thanks for the opportunity. So I also see the net debt has gone up quite sharply in this quarter. So could you help understand what are the factors behind that?
Yeah. See, the debt has primarily gone up. One is the subsidy which we have to receive almost 1,700 crores from the government. That there is an increase there. Secondly, the inventory now with Visakh refinery coming into almost full level production. Where if you see during this quarter, we have almost processed around 3.8 million metric tons of product. We had to hold higher inventory for crude as well as the higher inventory for the product. One more reason is that during this period we had an inventory of additional inventory of almost 2,000 crores because the during in the month of August and September, there were rains, and on account of which the demand was also muted. But this resulted in some increase in inventory in our portfolio. So primarily around 2,000 to 3,000 crore has gone up because of the inventory, and around 1,500 to 2,000 crores is on account of amount receivable from
Understood. Also, what is the capex plan for this year now?
the capex will be going around 13,000 crores, 12 to 13,000 crores. Out of that, we have already done 7.5 crores.
Sorry, how much have you done?
7,000? 7,187.
Okay.
Sorry, 6,588. 6 months, 6,588.
Okay, so you're almost at the halfway mark. And also for the Rajasthan refinery, has there not been much progress in this quarter? Because even last quarter, I think you had mentioned similar numbers on completion, 92% for refining and 80% for overall.
No, refining now, I think it is 24%.
Yeah, 92 plus. So towards the end, since we are going to our pre-commissioning and commissioning, the percentage will not be same. But in actual progress towards commissioning, it will be very close.
And commissioning, you think, is Q4, and Petchem will be, what, 1 year after that?
Petchem maybe after 6 months after that.
Okay. And could you also share HMEL performance for the quarter?
You want the quarter number or the half year number?
Whichever is fine.
During the half year, they had processed around 6.54 million metric ton of crude. Their GRM was around $9 a barrel. And they had during the 6 month period, they had a loss of around 300 crores.
300. And EBITDA?
EBITDA is around 2,000 crores.
Sorry, how much?
2,000, around 2,000.
Okay. That's all from my end. Thank you.
Thank you. The next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon, sir. So, first question is on this Vizag. I think so. You are basically in the process of commissioning the receipt upgradation at the moment, and by Q4 you are saying the entire DRMP will be ready, right?
Right. Yeah.
And so, in terms of volumes, we've already seen the upside, but the GRM we will put $3 of incremental GRM which we have been suggesting. So that we can assume from FY26 onwards. Is that right?
Yeah, that is right.
Okay, sir. And is it like fully, I mean, in the books of accounts, is there any more capitalization left, or we have like mostly capitalized with 27,000 to 28,000 crore of capital?
No, for Vishak, around 11,000 is yet to be capitalized. That will get capitalized in the last quarter.
11,000 crore of additional CWIP will basically get expensed in Q4. Okay, sir. Okay. Secondly, so right now, I mean, just to get a sense of your overall marketing numbers. So I think petrol, diesel, as you can see, there's no change in pricing. So I think the margins are quite high. At the same time, LPG losses have further increased because with winters, I think the prices of Arab Gulf LPG has also gone up. So if I look from a working capital point of view, not assuming that some subsidy may come later down the line, but in terms of debt and working capital, are you in a comfortable position right now, or can you see short-term debt going up further in the incoming quarters?
No, the debt is not going to go up.
So right now, because of high auto fuel margins, you are able to like eat up whatever losses are there in LPG, right?
Yeah.
Okay, sir. Just from my side, just a small follow-up. You said last year the inventory gain was around 950 crore in refining. Last year Q2, right?
Yes.
In this time, this 900?
I said around 900, I said. There was a gain.
Around 900 crore, and this time it is around 650 crore negative. Right. Thank you so much.
Thank you. The next question is from the line of Sumit Rohra from Smart Sun. Please go ahead.
Yeah, hi, sir. Very good afternoon to you. Sir, firstly, I mean, I would like to understand because, numbers are clouded, so many inventory movement along with LPG, etc. So, sir, your reported number is 650 and we have absorbed 2,800 crore of LPG losses and inventory loss of 1,400 crore. Am I right?
Yes, yes.
So effectively, I mean, so if I understand correctly, sir, that means if you add this back, we would technically be at somewhere around the 3,500 crore mark.
Yeah, that would be the normalized profit. You are right.
Okay. And sir, now for the if I see that the first quarter again you were weighed down because of these concerns of LPG. So effectively, where I'm trying to understand, sir, because see, the matter of fact is that anyway, investors are quite shaken up because of the result which is reported on the headline numbers. So if you can read through the numbers on the core performance of the company, is my understanding correct that we are on we have done about 5,500 crore of PAT in the first half. So effectively, what I'm trying to get at is that our core profitability has actually now substantially gone up from the past because of the projects and because of volume throughput coming. Is that correct, sir?
You're right. You're right. If that way,
so my understanding. Yes.
The core profitability will almost get doubled than what we used to do earlier. That was before the.
So effectively.
Will more than double.
Okay. Okay. So sorry. Effectively, I mean, if I can put it in simple terms, is that our core profit should be about 5,500 crores for the first half, which means that without the residue upgradation project, we have actually come to this level, which means that with the residue upgradation of Vizag kicking in F26, our profitability can be substantially in the 5-figure mark.
Yeah, you're right.
Okay. And sir, my next question, sir, is on the lubricant part. Yes.
Now, with the current trend of the crude, now crude, if you see, primarily now it is ranging between 72 to 78. Now,
right.
if current level and the crude remains range bound, then the profitability which we are referring to is likely to mature in the next quarter.
Okay, understand that, sir. Okay, sir. Coming to my next question, sir, is on the value unlocking part of the lubricant. So, if you can please help understand effectively, because the thing is that today, our market cap of around 1,000 crore or sub 80,000 because of the market crash today. I don't know exactly what it is, but somewhere around there. It clearly, is not reflecting it from an investor angle, right? Because on one side you've got Barmer Refinery, on the other side you've got Vizag, on third side you've got lubricant, which is the biggest, which is a 40% market share. So, sir, if you can help understand in the lubricant part, where exactly are we today in terms of the demerger and value unlocking?
See, we would need, since I'll be carving out this lubricant business, it would.
Okay.
There's going to be a change as regards because I'll be forming another company out of the existing company. So we need the approval from the Government of India for the same. We have already taken up with the Government of India on as regards the merger is concerned. So that approval we are waiting, because that would need an approval from the Ministry of Finance, from DIPAM and NITI Aayog. So we are waiting for those approvals to come.
Understood, sir. Thank you very much. And sir, just one last thing before I end. Sir, we have a presentation, which we have given to the exchanges, I think sometime back, in which we are talking about a 40,000 crore EBITDA, which is basically once the projects are commissioned. So we actually think that that could be beaten because of the quality of the projects of what we have now.
Yeah, we stand by what presentation we have given. There is no doubt on it.
Okay. Okay, sure, sir. Thank you, sir, and wish you a very happy Diwali and to you and your entire team, sir.
Thank you. Thank you. Thank you.
Thank you. The next question is from the line of Kiran Mehta from BOB Capital Markets. Please go ahead.
A couple of clarification on the Vizag expansion. In terms of the expansion in the current environment in a like-to-like case, how much profitability or EBITDA is added because of the expansion? Would you be able to give us some color? And second part was for the RUF unit, if this environment continues, so what could be the margin upgradation instead of $2 to $3 per barrel? Could you also provide some color under the current environment?
See, if I take the mid-cycle GRMs and calculate, the expansion of refinery from 8.33 to 15 million tons and bottoms upgradation to rough, that was to add almost 4,500 crores to the profitability of Vishak. Now, out of that, around 2,000 to 2,500 crores is because of the capacity expansion. The balance is on account of the bottom upgradation.
And the second question was about the Bhatinda. Could you also share the current petrochemical utilization and its contribution at the gross margin level?
They are operating today at more than 90%. That's what I can say as regard the operation of the plant is concerned. What exactly you wanted of Bhatinda?
Contribution at the gross margin level, petrochemical contribution at gross margin or EBITDA level?
I don't have it right now. We'll share it separately.
Sure. And the last question was about the Chhara LNG terminal. When do we expect it to start operating?
Before this financial year.
And what is the current bottleneck which we need to resolve to operate it?
No, right now we will shortly be coming in the market to book the commissioning cargo. Last time in April we had brought a cargo, but we could not commission because the sea conditions became rough and all. After that, the monsoon season had started. So effective October only, in the fair weather season, we could bring the cargo. So that cargo will be bringing it in December or January, and then commission it. Otherwise, we have got all the port approvals, the jetty and all, everything is in place. There is no issue. Only thing is we'll have to bring the cargo and commission it.
And what could be the utilization over the first couple of years in terms of the million ton throughput? We had said previously that our own demand could be of the order of 2 million ton or so.
Correct. So we for HPCL, our Mumbai refinery, going forward, even HMEL and our Rajasthan refinery, the gas would be moving from there only, because from Chhara we are connected to the national grid. It will go from there itself to all the places. The moment Vizag is connected through pipeline, right now that Srikakulam Visakhapatnam pipeline is half laid and yet to be completed. The moment that also gets completed, even Visak can be given from, so that can go from here. So if I see my in-house consumption itself is more than 1.5 to 1.7 million metric tons among these three units. Plus I have my own GAs where I can sell. Plus now LNG trucking terminal is picking up gradually. So we are already set up 4 LNG outlets. We have plans to scale up that facility also. A lot of new demand is coming up from LNG trucking also. So, and we see there's a lot of potential as regard LNG is concerned, and definitely the capacity utilization will also keep on improving as we go ahead.
Thank you, sir, for this clarification. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good evening. So in refining, what do you expect to change that will, get the industry going back to normalized margins? Do you see capacity closures, or are you waiting for demand for petrol and diesel to improve over time? What are the variables you would expect to change that will see some visible improvement in GRMs going forward?
Compared to the August and September, we are already seeing an uptick as regards the GRMs are concerned. The Singapore GRMs, if you take the benchmark Singapore GRM, they had gone down to $3.2 a barrel. Today's morning number, if you see, it is already reached $4.7 a barrel. Now, I'm sure with winter season picking up and all, China demand and all, those are the factors which will scale it up. The GRMs are likely to improve only.
Yeah. So I understand the short-term movement. What I am trying to get at is in terms of the structural, outlook for refining as a business, because there's a lot of excess capacity, there is a weak demand. So in terms of, demand and supply, do you see supply reduction or capacity closures happening in the next 1-2 years, which will give some, structural improvement in the outlook for GRMs?
Yeah, that would continue to happen. Even now it is happening, whereby few of the inefficient refineries they close down. And fortunately for us, we have recently revamped our refineries, or the Rajasthan refinery which is coming up is going to be a new refinery, most energy efficient refineries and all. So all those people who have old refineries or inefficient refineries, definitely there is a case for them to shut down, and for us it becomes an opportunity.
Okay. Now on the city gas distribution business and LNG, can you share some numbers in terms of when you see the commercial contribution from your standalone GAs in your P&L, and what is the kind of volume and say top line and EBITDA we can look at per cubic meter, or whatever you can share, say, over the next 2 years in CGD?
Even today we are doing around 0.4, 0.5 million metric ton of natural gas and LNG. We are even today doing that. And the same, once our terminal is commissioned, we will start bringing our own LNG cargoes, and we have planned to scale it up to 2.5 million in the next 2 years.
Yeah, these on LNG. On the city gas distribution volumes, can you give some color in terms of the progress on the network expansion, the capex and the volumes you expect to do, and some, indication in terms of how much it can add to your profitability on a standalone basis?
Every year we are doing a capex of almost 1,800 to 2,000 plus crores in the CGD space. And we have already, the network which we have put almost 100 odd, more than 130 odd CNG stations where we have our own GAs. We have already started getting the revenues from them. While they are not huge numbers, but they have already started contributing to our bottom line.
So just one last thought on that. So if you take a 3 to 5 year view, once you have a significant number of CGD GAs, what is the internal business plan, throwing up in terms of volumes and revenue and EBITDA, to get a...
EBITDA, we aim around 1,000 crores from this in next 5 years.
Okay, thanks a lot and wish you a happy Diwali. Thank you very much.
Thank you.
Thank you. The next question is from the line of Mayank Maheshwari from Morgan Stanley. Please go ahead.
Thank you for the call, sir. The first question was more on the operational side. In terms of the Vizag, I think it got pushed about by a quarter or so in terms of the startup. Do you see any other challenges in terms of further ramp up on the Vizag side, or you think you will be able to kind of deliver full volumes on the upgrade by the June quarter fully?
So Vizag, if you see, in the latest quarter we have already done 3.8 million metric ton, which is equivalent to the additional capacity what we have installed. So the full volume is already realized, and with the completion of bottom upgradation, even the value realization will be done.
So bottoms upgradation, we should be able to kind of see the full impact by March quarter, or it more looks like a June quarter thing?
It should happen in the March quarter only.
Okay. And so the second thing was in terms of the Rajasthan refinery, what would be the net debt sitting on the books at Rajasthan right now?
It would be around 35 to 37,000 crores.
Okay, got it. And so the last thing was more related to the marketing side of the business. You have obviously done very well. I think you have kind of got some market share on the diesel side. Like, can you just tell us about how you are doing some of these market share gains, and is there more scope for you to kind of grow market share in some of these places?
Yeah, that's always our resolve, to gain more market share. And if you see consistently past 4 quarters, we have been gaining in terms of market share itself. Not only in the MS and HSD space, but also in our direct sales and the lubricant space also. Even LPG and ATF, if you see, we are having good volumes, and the market share growth in the business lines.
And sir, just on this marketing point, sir, industrial side, how are you seeing competition? And can you give us a bit of a sense subjectively as well? How's competition doing? How margins doing on the industrial side?
The industrial has always been quite competitive, both for diesel, bitumen, and all. And as regards the competition is concerned, yes, in the industrial side, we have a market share of around 13% in that space. IoT is the major one, around almost 70%. So that gives us the opportunity to increase our market share there. So that is one area where we are focusing as to how we can increase our penetration into bitumen, then HSD, as well as the specialty products of HZ, NPO, and others.
Okay, sir. Perfect. Yeah. Thank you.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much. And my first question is on, what is the LPG price that you need to reach zero under recovery?
It should be more increased by almost 200 rupees per cylinder.
200 rupees per cylinder. And in terms of Russian crude, what is the discount you are enjoying currently?
It varies every month.
Yeah, on average, for example, last quarter.
Pardon?
Last quarter, what would it have been on an average or a range, if you can give?
It's around 170 to 180 rupees.
Sorry?
Around 170 to 180 rupees per cylinder.
No, on the Russian crude, I'm asking the discount on Russian.
The discount has come down significantly, but it's still cheaper than the other two. So, yeah.
Any range that you can share in terms of discount? Dollar per barrel?
No, I cannot.
Okay. And you talked about 4,500 crore as incremental profit from Vizag. What is the underlying GRM you assumed for that?
Yeah. It's around $6 to $8 a barrel. Yeah.
$6 to $8.
So perhaps it will increase by another $3.
And that's your GRM, not the Singapore benchmark GRM.
Yes. We have worked on our
$6 to $8 and then $2 incremental for our refinery upgradation part.
Yeah.
And lastly, if you can talk about any cost escalations you're seeing on the Rajasthan refinery side and the Vizag project side. Revised cost numbers.
The revised number for Rajasthan is 73,000 crores, and that is, since it's a EPC contract, most of the, I gave you the number, the total commitment is 70,872 as on date.
Okay. And Vizag?
Vizag is 30,000 crore is the total project cost.
Okay. And no change, because now you should have a concrete view of this cost, right?
Yeah, this is final, right?
This is a final cost. Okay, that's great. Thank you so much and all the best.
Thank you. The next question is from the line of Vishnu Kumar from Avendus Spark. Please go ahead.
So thanks for your time. On the incremental GR that you mentioned, so the $6 to $8, this is an absolute or like we should consider 3 plus 4, which means the range is about 10 to 12.
No. The question there, what was asked is, what is the mid-cycle GRMs you are considering? So there I said we consider around $6 to $8 a barrel. And post rough, we consider an incremental of $2 to $3 a barrel.
Got it. Sir, once we have the bottom upgradation completely done, can we increase the Russian intake of crude in Vizag? And is it possible? If possible, how much can we get to?
Yeah, already at around 40% we are there. Depending on the opportunity, it can go by more than 10-15%.
So on a blend, so we already reached 40, maybe we can go to 50 is what you're saying.
Yeah, right.
On Vizag.
Right.
Understood. Sir, in marketing business, if you could just help us understand what would be the per liter diesel and petrol margins this quarter, and also if possible for the last 2 quarters.
I can only give you the entire marketing margin, not product-wise. Not sure.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rituparna Ghosh from Argus Media. Please go ahead.
Sir, thank you for taking the call. My question is regarding what sort of long-term tenders you're seeing in terms of Chhara LNG terminal?
Can you just repeat your question, please?
Yes. What sort of long-term LNG contracts are you seeing from Chhara LNG terminal? And also
sourcing or
sourcing, yes, sir. Sourcing.
Yeah, we will be tying up for our requirements because this terminal is a 5 million metric ton terminal. Like if I told you that we have a plan to reach 2.5 million metric ton in the next 2 years. So I need to source or contract that much quantity, only then I can be there. So we will be gradually phasing our procurement plans in line with our business plan to increase the LNG volume.
Okay, so any line by which you will be closing the deal, or what sort of response are you getting from the global market in terms of the sourcing?
They are already in market as regards long-term sourcing is concerned, and the response has been quite good.
Okay. And so second question is regarding the building of breakwater facility at the terminal. How far has the work been reached?
For the LNG terminal, the breakwater which is required is around 1900 meters. Now out of that 1900 meters, 1050 meters have already been done. And the balance also, it has reached 4 meters below the water level. Up to that place it has been done. Now with the fair weather season starting effective October, the work will shortly start over there for completing the balance part. We are hopeful that in this fair weather season, the same should be completed.
You're hopeful? Sorry, sir, you're hopeful to complete the work by this fiscal year?
In this fair weather season.
In this fair weather season. And so, lastly, to confirm what you already mentioned, that you will be getting the commissioning cargo in December and January, correct, sir?
Yeah, December or January, we will be getting the cargo.
Perfect, sir. Thank you so much.
Thank you. The next question is from the line of Shivansh Sud from Desvelado Advisor. Please go ahead.
Hello. Hi. Yeah, am I audible?
Yes.
What the question was like, with the changing geopolitical dynamics in Russia, so do you think the discount factor you're getting from Russia is going to increase or decrease in the coming near future?
See, one thing is there, see, I don't buy Russian crude just because it is a Russian crude. I buy because it makes value in my system. So long the Russian crude will make value in our system, and it is better than processing other crude, we will be processing the Russian crude. So depending upon how the environment behaves or what is the level of discount and all, the same would be analyzed on a case-to-case basis, and accordingly the sourcing will be done.
Okay, thank you.
Thank you. The next question is from the line of Gagan Dixit from Elara Securities. Please go ahead.
Thanks for taking my question, sir. Sir, there's a 1 month back news that your parent company ONGC is planning the 12 million ton refinery that in UP Prayagraj. So, is there any possibility that this HPCL will also be involved in the later stages for that, because the parent company is?
You should ask this question to the parent company because I am not aware of this.
Okay. Yeah, that's for me.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you very much for the follow-up. So you have the renewable subsidiary. So just like NTPC is planning to do a float, when do you think you can reach a commercial scale to think of a listing like NTPC? Any thoughts on that?
Maybe maximum 2 years we should be reaching that.
Okay, and any numbers you can share in terms of what is the scale, in terms of megawatts of power, some sense in terms of investment? Can you share some numbers for the next 2 years?
Right now we are doing around 200 plus megawatts of renewable there. We have plans to set up more CBG plants also under that business. And maybe by end of the year we may tie up another 200 odd megawatts. And next 2 years we want to be touching around 2.5 gigawatts as regards.
And what will be the size of the balance sheet or investment over the next 2 years?
It will be around 20,000 crores is what we had anticipated.
20,000.
Both the renewables as well as the biofuel.
Okay. So on MRPL, there has been a lot of backing and forthing on the merger proposal. Given the kind of challenges your refiners are facing, do you think you will again take that issue? Is there any progress likely on the MRPL merger?
Currently, there is no such discussion. As and when it comes, we'll definitely review and things will happen.
Okay, thank you very much.
Thank you. The next question is from the line of Vimal Sampath, an individual investor. Please go ahead.
Yeah, good evening. My question is pertaining to lubricant business. By when do you think we will be able to demerge?
The moment we get the approval, it may take another 6 to 8 months after that for the entire process to complete.
Okay. And we are planning to manufacture some products for Chevron. Can you please give some more clarity on that?
We are already manufacturing the same in our plant.
Okay, so is it a kind of technical tie-up or only job work we are doing? What is it?
It is both.
Okay. And then we will marketing jointly, or they will do it in their name only, or how, or through our network we will do it?
They are directly marketing, but they can use our network also.
Okay. And second thing, now in next 2-3 years, with our lubricant business and green this thing, all will be demerged. So I mean, and our refineries also, we have joint ventures. So we will be a very large conglomerate.
Yeah.
I mean, how are you looking at it? I mean, looking at.
It is already a separate company. It is not demerged. It is already a separate company.
Okay.
Then we have the gas, HP, LNG, that is a separate company.
Okay.
Right now we are talking about lubricants also.
Only lubricants. And this, because gas also will be very significant contributor to our. So in future you may demerge gas also?
Gas is a separate company.
Okay, gas is totally.
LNG terminal is a separate company.
No, I'm talking about this CGD and this biogas, what CBG, what you are going to do, no?
We will evaluate that as and when it's once GST and all is implemented, we will see at that point.
Okay. That's all. Thank you.
Thank you. The next question is from the line of Umar Farooq from Crisil. Please go ahead.
Hello. So thanks for opening up the question. So the question is regarding, as we have seen a drop in crude oil prices. So what are we expecting for the upcoming quarter to be like in regards with the marketing margins? If you can shed some light on that.
Can you just repeat the question, please, a bit louder?
So with the crude oil prices declining, and if you expect crude oil price to remain, as you have said, to around $72 to $78 per barrel. So what are we expecting for quarter 3 of this fiscal regarding the marketing margins?
See, that we gave you a number, no? On the normative, in case we get our normative margins and all, the numbers where we will be. In the initial questions, we had covered that. And in case the prices of the crude are going to be around the level at which they are, then in such a case, there will be no incident of any inventory loss or gain.
Understood. So my second question will be, as the center has been pushing so much on ethanol blending to reach either 25, 26. The ethanol production capacity has also increased to 1,623 liters, as the Chini Mandi has recently reported. So by when can we expect ethanol blending to reach 20% of targeted blending? Is it possible that we achieve it by next fiscal, or do we have to wait further?
Even today, the ethanol blending is almost 15.9%, which is being done. And what has been said is by 25, 26, the ethanol supply year, ESY, the 20% target is to be achieved, and it will be done by that time. And today there is no problem as regard availability of ethanol is concerned. So gradually this percentage you will see that it will keep on increasing, and the target of 20% in ESY 25, 26 will be achieved.
Okay. So I had this issue question because very recently ethanol producers have raised issues as OMCs are not procuring enough ethanol. So that was leading to excess supply in the market. So was there any problem, or are we OMCs facing any issues in regards to procuring ethanol? Maybe if we procure more from producers, that 15% what we are at now could be 16 or 17%. If
the availability is higher, we'll go for higher percentage.
Okay. Thanks. That's all from me, and I wish everyone a happy Diwali.
Thank you.
Thank you. The next question is from the line of me, an individual investor. Please go ahead.
Hi. Hello. Hi, sir. Thank you for the opportunity. My question was the $6 to $8 GRM that you mentioned, mid-cycle GRM. So is this for the company or is this in reference to the Singapore GRM?
Company.
Okay. And this leads to, you were saying that at this level, it leads to a PAT addition of 4,500 crore in Vishak for 15 million metric tons of capacity, right?
I referred with respect to the pre-expansion and the pre-investment period.
So this is an addition of the total?
This is not addition. This is before, when the refinery was at 8.33, by doing all these investments, it would have resulted in an increase of 4,500 crores. That's
Right. And my second question is regarding HRRL. So we in the presentation we had mentioned a $20 mid-cycle blended GRM. So is that still valid, or like what do you expect the blended GRM to be for HRRL?
See, those are the numbers at which the financial appraisals have been done.
Right.
If you calculate it today, maybe the number would be different, but these numbers will keep on changing. This project which is coming up is going to come up for next 20-25 years. So things will keep on changing over a period of time. At a particular moment of time, you will see that sometimes it will be better or sometimes it will be less. But over a period of time, this is the number which the refinery would be realized. If you take a case, last year there was a period when the GRMs used to be in double digits. It used to be 13, 14 on MSHSD processing only. But today the GRMs are lower. So these cycles will keep on coming and going. But when you evaluate a project, you evaluate considering a particular level or particular period what the GRMs are likely to be. So the numbers which we have considered for HRL is the numbers which you are referring to.
Right. So for a 8,000 crore EBITDA, we would require something like $12 per $12 GRM from HRRL?
I don't have the numbers right now, but I will share it separately.
Sure. Thank you. Thank you for the opportunity.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Varatharajan Shivshankaran for closing comments.
Thank you, Nikita. Sir, if you have any closing comments to make, please.
So we have already said what we thought was the relevant in this.
Sure.
Regarding this quarter is concerned, would I only take this opportunity on my personal behalf and on behalf of our Director of Refineries, Mr. Vinod, and all our HPCL staff and employees. We wish each and every participant a very happy Diwali, and to them as well as to you, Varda, and all the best to you all. Thank you.
Thanks a lot, sir. I wish to thank all the participants and the management for taking time out and discussing it in great detail. Wish you all a happy Diwali. Have a nice day.
On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.